Yesterday we're in Frankfurt, today we're in Riga. Some of the takeaway from that press conference for some is that the ECB took a dovish tilt yesterday. Was there a dovish tilt yesterday?
No, I don't think it was dovish. It nicely reflected the discussion that we had in the 2 days, on Wednesday and Thursday, and nothing really dovish out of it. But lately I have a feeling that markets take whatever you say as being dovish, being very trigger happy.
But that's a very good point that you make, because some believed, and I wonder what you think of this, because you just said no, there was no dovish tilt yesterday, but some believe, because the head of the ECB didn't fully rule out or deny April, that she kept it on the table for potentially a move. You don't see it that way.
No, I think that what she said, and this is exactly something that if you are data dependent, you will always say, is that you are data dependent, not date dependent. So you're not going to discuss the date as such, but you will be guided with the incoming data. And three principles that we have laid down much earlier that we'll look at and that will determine our next rate move whenever it comes.
And I don't want to get caught up in the dates, as you say, it's about the data. But I wonder, technically, will you have enough data to make a decision come April? Or actually, do you say, guys, calm down, we may need the full first half? There's a lot of data that we need to digest, and that means June.
We need the patience at the moment to get enough data to be confident that the inflation is really firmly, sustainably on the way towards our medium-term target, and that will come gradually. That will come over every month. We also said that the important data that we still lack are the ones on the wages, because the supply shocks have not been important recently anymore, as the effects have largely dissipated. So we still have the strong domestic inflation, which is tied to the wage developments, still strong labor market. And these are the things that we will need time to see and then decide what's going on.
And do you have a calendar in mind, or actually your mind at this point is open? And on that note, by the way, some say if you cut early, let's say April, I know you've said you're not clear that is going to be the month, but some say an early cut will not fix the fundamental issues going on with the economy, if you believe it's softer, and may undo some of the work on fighting inflation. So is that what you think too, that an early cut, is there a point of going too soon, too early to help the economy, perhaps, if you believe inflation is on target?
What we're seeing is that we do have a disinflation process nicely developing. We also have the economy, which has not gone into a recession. We do still have a risk of a technical recession, but not a real deep recession.
So
it's more of a stagnation, and then we do see also the signs of a possible recovery coming later this year. So nothing to be much worried about at the moment. And we also see that the transmission of our monetary policy in the markets is running smoothly. And we see also that the markets overall are running smoothly. So overall, I would say it's a good picture, the picture that we like to see at the moment, but we still have to wait for more data and to see how the things will develop over the next months.
You say the markets are running smoothly, but they seem to be, to some extent, running also ahead of you. Do you feel pressured in any way by the chit-chat in markets?
Well, the fact that they are running ahead of us means that the financial conditions got softer earlier. So you do have already that effect, both in the curves, in the yield curves, and you have that also effect in the banking market, both on the asset and liability side. You see the anticipation of the bankers and the way they price both the liability and asset side of their balance sheets. This is something that is there, and I don't take a view on that. Markets are always there to price, and sometimes they're right, sometimes they're wrong.
Okay, that's in the market pricing, but do you take a view on anything that the Fed may do? I know you also say we're not Fed dependent, we're data dependent, but some believe maybe the ECB will go first. Whatever the Fed does may condition what you do. Do you feel there's a correlation there?
No, I think we should look at our European data and make our own decisions. And at the moment, you've seen that you had also significantly stronger growth in the U.S. in the fourth quarter than we've seen in Europe. So it's not also that the two economies are evolving at the moment in the same direction, at the same pace.
And sir, when you do cut, is there a possibility, just to almost try to understand where this debate is going, forget about the date, but is there a possibility where you say we cut late, but we go bigger? Or is that something that you still haven't even contemplated?
This is also a possibility.
The magnitude may matter more than the timing, basically.
This is also a possibility. Ideally, you would like to see the 25 basis points cuts when they start, but there's always a possibility.
To absorb, or
yeah, this is a smoother way of running a monetary policy, but of course there is always a possibility of doing more if warranted by the data.
Okay, and then I have to ask you, yesterday the head of the ECB spoke about a survey that leaked. I'm sure you've seen the survey, I'm sure you've seen the results internally. And she said that for the most part she feels she works well at the ECB, and she said almost, don't look at me personally, I'm irrelevant, what matters is the results that we do. What are your views on the head of the ECB? I know you saw her yesterday. Are you happy with the way things are being run?
I can speak of how the Governing Council works, and the Governing Council works really smoothly, and she is a good chair of the Governing Council. I did not see any problems in terms how the Governing Council operates, and I'm very happy with that.
And economists, do you think at times are a little bit too cliquey? It can be a tribe? Or, you know, it's normal. You don't feel like you're a tribe.
I don't feel like being a tribal guy, but I think every profession has its own firm views on some things, and that's nothing special about the economists.
And sir, just a final question. When you look at basically the medium term, what do you think is the biggest risk? You know, some say ultimately for the ECB, it's always this tension about, do we wait because we think that's going to be better? Do we wait too much that it becomes detrimental? What is more dangerous to you at this point? Because you're going to have to make big decisions this year. That you wait and that hurts the euro area, or that you go too soon and then undoes what you've done?
I don't see at the moment much of the damage that we can do to the European economy given where it is. And it's better to be safe on the side of the inflation developments, and that we are firmly convinced that the inflation rate is coming down towards our medium-term target before we move. I think there's more risk in moving too early and then, you know, seeing that the developments, inflation developments are going the way that we did not expect.